Hello, hello, hello. Can anyone hear me? Hello, 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 hello. Try again. All right. Can you guys hear me now? Better microphone, better mic. How's everyone doing? What's going on? So you might ask yourself, where the hell are you, Al? What's going on? Well, I'm in the airport. I'm actually in El Paso. So let's see what's going on here. Hello, hello. Okay, good. So first off, let me show you my office. So where the hell is it? There's my office. So you can see Delta Airlines is in the back. I'm not flying Delta. You can see the computer here. You got to have a smart water because we're smart money, not dumb money. We got the little coffee here. And we got a screen here, a screen here, and a screen here, and have a mic. And I'm sitting right here. So that's my jacket. So that's kind of where we're at right now. We're in the airport doing this podcast for you guys because, again, I promised you to do it last Sunday, but unfortunately didn't have time. So in this video, we're going to go ahead and we're going to be talking about this company here called SoundHound stock. Ticker symbol SOUN. I don't know a lot about this company. I need to learn more about it, but I know a little bit more than the average folks. But overall, some of our members said, "Can you show us an example of how you can calculate an intrinsic value of a company and set your own price target?" So in this video, we're going to use this company as an example because I believe it's still free cash flow negative. So due to that being free cash flow negative, it's going to be one of those 5% rules that I do because they're still negative on the quarterly basis. I think the most recent is negative 19 million. So using their own free cash flow won't actually help because they're negative. But year to date, they're up 164%. So why are they up 164%? In 6 months, they're up 45%. In a month, they're up 10%. 5 days, they're up 9.78%. 1 day, they're up around 5%. A year, they're up 222%. Again, our stock is outperforming, but 5 years down negative 15%. So what's going on with this company? And could we have predicted it? Right. So first things first, let's look at the comment sections. Yo, what's going on? We are getting spoiled. Alan Brace, the Herd, Amber Heard. I'm just kidding. Sebastian, how you doing, Sebastian? Ethan. Yes. Thank you for responding. You can hear me. Hope you do an intrinsic value. So yeah, I would recommend my friend join our platform. The individuals who recommended this are in our platform and they're messing with the numbers. I just wanted to, it's good to you do it first and then I can go ahead and come in. Oh man. So actually I'm in El Paso now. So where the hell is it? I'm in El Paso. So I'm about to go to Phoenix right now. My flight's going to leave soon. So we're going to get to this live quick. Yeah, chart looks good, Al. Are you flying to Vegas? Oh, no, not anytime soon. Flip burgers, baby. McDonald employee here. Oh, hey, welcome. Hey, anybody can become a millionaire. Kamala's not here today. Kamala. Okay, weird comment. All right, Kamala. I just saw a video of Kamala, and she was giving a lot of gestures, and I just could have just remembered what has been burdened by what has been. All right, so we're gonna go ahead and show kind of what's going on here. So first off, there's this guy. This is a pro article. You guys can read it of who he is. But here's what Seth Klarman, the hedge fund manager compared to Buffett, is betting on now. So he went ahead and bet on SoundHound when it was under $5. He went ahead and bought. He cut his position in Warner Bros. And he bought stakes. So who is this guy? Well, if you go to our mastering, he's one of our legendary investors. Okay, so in the mastering, I've been doing this for over 10 years, and I found investors that are the best of the best. And he's one of them. So in this, I'm not going to show you the bottom because that's for our members. But this shows you all of, like, here's Bill Ackman, right? This shows you, all of these people's philosophy in investing. So, like, yes, this person, bought the stock, he bought it, and it's done really well. I mean, look at it. It's done really well. Don't you find it interesting that our mastering stock market course and lifetime access to our data somehow just did it again, found another multi-bagger? Again, I've given you the most concentrated dosage to take you from zero to hero. So I'm glad that we were on top of this one as well, right? So let's go ahead and Al photo up on the list next. Oh no, you're too kind. You're too kind. So so yeah, so let's go ahead and just open up the stock terminal and get to it. So the first thing I like to do, well, first things first is open up the mastering here. So we go mastering. Open up the intrinsic value. Okay, fire that one up. Okay. Okay. So there it is. And then we can go ahead and activate our help menu real quick. We're going to go to master analysis, click that button. Then we go to Wall Street, then we type in SOUN, SOUN, and that's going to fetch the data, and that's going to give us that's going to give us a table. Okay, so let it fetch it. It builds it in real time. Okay, so here's the table, and you can see the revenues is here, so it's around 55 million. Free cash flow is still negative, and it gives me the shares of 332 million. Okay, so let's go ahead and do the math here. So overall, we can take it from 2020 to 2024. So 55 million. So we can just do it this way. So 55 million, 2024, and then we do 2020. We use the numbers here. Where's revenue? 13 million, just to see kind of what's the growth rate. Growing 43%. We're going to go 10 years into the future. We're going to say 55 million multiplied by 0.05, because that's how we estimate future free cash flow. We go here, we get 2.75 million. So we just do 2.7. It doesn't matter where we put it, just takes the average. Then we divide by the number of outstanding shares, which is 332. And we get this price here. Okay. So we get this one. Okay. And that's what it was trading at. That's what the market was evaluating it at. Because if you look at it, the 52-week low is $1.49, which falls right in line with the base case of the intrinsics. In fact, if you go here, the lowest of the low is 93 pennies, which falls in, holy crap, that literally hits our bear case of 93 pennies. So if you look at the low here, the absolute low was right around here in the 90-cent region, literally 90 cent back on December 30th. So if you go to 2022 and just kind of go to 5-year and go to 2022, it was an intraday low probably, but it was near 90, right there, right? It was really low. So the question is, what's going on with this company? Why? Well, first off, this is a voice artificial intelligent company. It's a software. So it's very difficult to use 5%, given that the gross margins may be high. So let's look at our gross margins. Our gross profit ratio is 65%, meaning that this company has the potential of taking 10 to 20% of free cash flow, 10 to 20% of revenue, and translating it into free cash flow. This is a lot tricky of a business to analyze, because you have gross margins improving, gross profit ratios improving. So the overall gross of the company, meaning that for every dollar they make, they actually bring it into free cash flow. Let me go and drink some water real quick. Hold on. So with that, this requires an extra set of tools to look at. So you would have to upgrade your analysis, and you would have to say, Instead of 5%, I need to do 20%. Because if you take Palantir and take the revenue multiplied by 25%, then you get ultimately the free cash flow. So there's that. So if you take that and you put now 11 million, look what you get. Now you get an updated target. You get a recession of 167 and a bull of 787. Okay. Obviously, our legendary investor bought near the lower end here, and then he made his money, right? So if you look at the stock, it oscillates between the past year, it oscillates between that $1 region all the way up to that $8 region. There was some pressure in that $8 region, which falls in line with our bull case of near $8, right? So that's kind of how you do this calculation, right? Once you do a lot, and once you, like, every company has, it's either going to be a high gross margin, high low, you could start personalizing the intrinsic value based on that. Now we can go to Yahoo Finance real quick and just kind of see what analysts are thinking. So let's see what's going on here. So yeah, look at this. Their 1-year target is $7.79, which literally falls in line to our bull case. You can see how accurate our intrinsics are. And guess what? We have the data now that that unfortunately we have to rely on Morningstar to do. Now we have it to where we can actually do this. Look at the analysis real quick. Let's see kind of where we stand. So they think that the revenue is going to grow 84%. So they think this is going to be a higher revenue. And remember, I use their numbers here, which is 13 million to 55 million of revenue, which is here, 13 million to 55 million, which then we got 43%. Okay, 43%. They're saying that this thing can grow 84%, which makes sense because $55 million is not a lot of money in comparison to a publicly traded company for revenue. So this can go higher. So let's put in 84%. Okay. We'll put in 84.20. And now we get to $15 to $87. The problem is a company, it's unrealistic for it to grow 84% for 10 years. Okay. Let's go back to our 0.05% and let's see kind of the bare bones of 275. Okay. We do that, we get a price of anywhere between sorry for the background noise, I'm in the airport. We get $3.87 all the way up to $21. So this may be the appropriate price. But if you really want to be somewhat looking at how high this could go, you could bring this back up to 20%. And again, I personally would do the 5% as of now because I haven't seen them, but the gross margins are high, so we call it 11 million. But instead of 84%, you could take 75% of that. You would get 63%. You get 63%, then you get back to that same price target I showed you of that $21. So this thing can go anywhere between $5 to $26, which is what I think our legendary investor is betting on. Okay. So now let's go ahead and let's look at the price target of what kind of analysts think, which then we can use our handy dandy intrinsic value. Okay. So let's go up, open up the help menu, look at price target, look at kind of the price target consensus of SoundHound. And you can see kind of this is the $9 and $8, right? So this is kind of what analysts are telling people. But again, they're not going to tell you the whole story. They probably want you to sell at around $8, right? It's a buy, obviously, and they want you to sell out at around $8. But this could technically go higher. It depends if they essentially make it. But there's a lot of people that say buy. And you can use our stock terminal to look at who's basically saying, which analyst is saying. So we could just go here and type in SOUN again and take a look at which analyst and go even further and do more due diligence. So I think it's this one here. It's this one. You can see kind of who's posting who, right? Right. So this analyst here, Scott Buck, he posted a $7 price target when it was $4.80. This guy says 9. So again, you could follow these people and their performance using our stock terminal. Okay. someone who I really respect, whom I frequently talk to on Twitter, is Daniel Ives. Daniel Ives is actually a really well-known analyst. He actually was able to predict Tesla's Apple's crazy rise by looking at their service section, and they realized, so he's really well known. He works at Wedbush Securities, very well known. So for what it's worth, he has a price target of 9. So obviously there's something here. And what's funny? This stock was low as hell while our stock terminal members were actually calling them out. So congrats to all of you guys. But that's how you set price target. That's how you kind of do it. So just to kind of reiterate, we did you could just rewatch the video, but we did the master command and looked up the overall image. If I can find it. We did the revenue, and we went ahead and did 5% of the revenue. Then we did 20% of the revenue. Then we went ahead and did the 43%, which is the actual growth rate based off of the, from 2020 to 2024. Then we did the 84%, which is the analyst growth rate. Then we took 75% of that, and we got at the same price at anywhere between $21 max to $25, right? So that's pretty much how you do it. So I hope this is helpful. Imagine if, because you technically didn't need the revenues. Imagine if you would have done this when it was 90 pennies, right? All you needed to know was kind of what overall is the growth rate for the company here. And the growth rates has actually been pretty marvelous. Let me just look at the growth rate here. Going from 31 to 40, this is a pretty intense growth rate, right? So you can go ahead and do that, and you would have been able to predict the stock price and made money. That just shows you the power of the stock terminal and the power of the lifetime access. So if you do find value, this coupon will expire, so take advantage. The price is only going to go up. Coupon code is Main Street, one word. So that's pretty much it. That's the video in the nutshell. So I hope you guys enjoyed that. Other than that, that's all I have to say about SoundHound. We'll continue to follow it, and we'll see if the prediction comes true. Other than that, I'm gonna get ready to get on the next flight. I'll see you on the next one.